Hi and welcome back to today's morning report on Thursday the 5th of March with me, Rich Pro Market Analyst at Handtech Markets. Let's move on to the Euro and this big breakdown that we saw yesterday. The 10.98 support got broken yesterday decisively, and that is now pulling the Euro to the lowest level since 2003, and that means that what we're seeing is the longer term chart that I can show you here just shows that we're now at levels, as I said, not seen since 2003, but the next support is $1.0760, and that is now open, and the fact that we've broken below the 100% Fibonacci projection target, actually the next fib level is all the way down at 93 cents. Wow, that is incredible on the downside. But what we'd be looking out for is the next real support doesn't come in until probably now. You're looking at the psychological €1.10 level. But what I've drawn in here is this Fibonacci projection of this down leg that then saw the consolidation, and then you can just project that downwards from that reaction high at $1.1532, and that gives you these Fibonacci levels on the downside. And what we'd now be looking out for is 109.67 as the 38.2% fib level, which is the initial downside target. Now you've broken below that 10.98 level, so that is a very realistic target now as the next stopping area for this Euro sell-off. So just keep that as your base case there. This is the intraday hourly chart. You saw this consolidation over the past few days, and then the break back below 10.98. And interestingly enough, old support becomes new resistance, and we saw the breakdown and then a bounce back hitting 10.98 pretty much to the pip before selling off again on that bar. So that is interesting. That obviously now is the initial resistance, 10.98, and also you could argue around $1.1150 seems to be a basis of old support and therefore new resistance as well. So a couple of levels there for the rebound, but it looks like we're going to be weaker today. Got this ECB press conference this afternoon, going to put more meat on the bones on QE, and the market will be looking out for exactly what the ECB is going to do in terms of technicalities, composition, etc. So this is likely to now continue to weaken the euro, and it's likely that you should be using any sort of rebounds as a chance to sell in this euro chart. But as I said, 10.98 is that initial resistance to watch out for, but certainly the downside projections coming in at 109.67 and then 107.92 as the 50% as your next level below that. So you do have some downside targets there to work with, but it certainly looks like the euro is going to be going weaker. All the daily momentum indicators are weak in weak configuration, but also have further downside potential as well. RSI only just below 30, got down to 17 back in Jan. So there is further weakness that we could see. We've just had a bear crossover on the MACD lines as well. So pretty much across the board, Euro looks in trouble once again. Anyway, I wish you good luck in your trading on Euro today, and I'll speak to you later. Thank you.